Welcome to this week's episode of Accredited Investor Markets Radio. Each week we speak with you about investing in alternative assets. Unbiased and beholden to no one, Accredited Investor Markets Radio does not accept advertising from any investment firm or financial advisor. Accredited Investor Markets Radio is the spoken word sister of AccreditedInvestorMarkets.com, the internet's most comprehensive and unbiased educational resource about crowdfunding, angel investing, venture capital, private equity, private shares, and other investment classes beyond publicly traded stocks and bonds.
Hello, everyone. Welcome to Accredited Investor Markets Radio. I am Christopher Cahill. In a few minutes, we'll be speaking with Scott Picken of Wealth Migrate, and he will be talking about cross-border crowdfunding as an investment mode for real property. And I know that so well, not only because I've spoken with Scott Picken of Wealth Migrate, but because AccreditedInvestorMarkets.com, AIMkts.com, has an interview with Mr. Picken in written form. A few minutes with Scott Picken of Wealth Migrate. It covers how his background brought him into the crowdfunding space, why he thinks crowdfunding is a fit for the global real estate market, and what he sees as the biggest risk factors for cross-border investment in real estate, not to say anything about cross-border investment in real estate through crowdfunding. The same risks apply to both. But that's not our final stop in the Financial Poise suite of websites. When we go to financialpoise.com, you will find life hacks. Life hacks are divided into healthy life hacks, wealthy life hacks, and wise life hacks. Well, let's stick to wise. There's a life hack entitled, "A little knowledge is a dangerous thing." And indeed it is, because a person might cite that phrase and not really know its provenance, its origin, and is getting it wrong. The phrase that people think they're remembering is really by Alexander Pope from his 1709 essay on criticism, which begins, "A little learning is a dangerous thing." And indeed, that's true too. Pope goes on to talk about how shallow drafts of learning intoxicate the brain, quote, "and drinking largely sobers us up again," end quote. So with a little learning, you might become an enthusiast for half-baked notions. That is something we here at Financial Poise and Accredited Investor Markets Radio hope to keep from happening with regard to half-baked notions on finance. The little learning thesis reminds me of the word sophomore, which many of us equate with the term wise fool, and that's quite accurate. Sophos is the Attic Greek root of the first part of the word. It means wise. Moros is the Attic Greek root of the second part of the word, and it means foolish or dull. It is also the root for our word moron. So we can go from the wise category of life hack to the wealthy category of life hack with Alexander Pope in a slight alteration. Pope wrote, "A little learning is a dangerous thing." We could also drop the L and say, "A little earning is a dangerous thing." And that sentiment is not entirely alien to the spirit in which the financial information on Financial Poise is offered to you. Moving on now to Commercial Bankruptcy Investor, an article entitled, "Don't Pass Me By, the Jevic Case and Bypassing the Absolute Priority Rule." Now don't run away. It sounds like inside baseball for bankruptcy, but let's have a little fun with it anyway. It's dated July 13th. It's written by the editorial staff of Commercial Bankruptcy Litigation. In Chapter 11 cases, there are few actual reorganizations where the company survives in a new form, free of debt or with debt being restructured. More often, liquidations result. The liquidation, you should understand, is not a matter of everyone being left with zero. No. Some people get paid in full. When I say people, I mean some actors get paid in full. Some parties get paid less than full and some don't get anything at all in a typical scenario, although everything depends upon the facts and the amount of wealth that the estate has. And these payments are allocated according to the priority scheme in the bankruptcy law. Some actors, some parties are entitled to get paid in full before the next party. It's sort of a waterfall. So secure creditors get paid in full, and then money goes to various administrative claimants, administrative obligations that arose during the case. After those are paid in full, money goes to priority unsecured creditors like taxing authorities in some cases, or beneficiaries under the WARN Act. And then if those are paid in full, then general unsecured creditors like trade creditors get paid. And after they get paid, then maybe the owners of the company can get paid. Well, the Jevic case features an upsetting of the priority scheme by something called a structured dismissal. We don't need to get into that. You can read the article in Commercial Bankruptcy Investor. But what I wanted to draw your attention to is the title of the article, Don't Pass Me By, the Jevic case and bypassing the absolute priority rule. Don't Pass Me By is a reference to a Beatles song on the album The Beatles, otherwise known as the White Album. And Don't Pass Me By is an example of the Beatles creating a melody in the great British music hall style. Don't pass me by, don't make me cry, don't make me blue, 'cause you know, darling, I love only you. I love that stuff. And I know the person who entitled the article loves that stuff too. Brad Daniel is the editor-in-chief of Commercial Bankruptcy Investor and a great musician himself, and also the author of serious writings on music history, including on the Beatles. More about that some other time. Now, I just sang on the air, and the last time I sang on the air was some doggerel I composed about cybersecurity to the tune of Mamas, Don't Let Your Babies Grow Up to Be Cowboys. Cybersecurity is a pretty great job to have these days. It's going to be a growth area, unlike doctors and lawyers and such, or cowboys. So I sang about it. Well, the Wall Street Journal of Wednesday, September 16, 2015, an article by Orr Hirschage entitled To Fight Hackers, Firms Go Undercover, brings to light another aspect of cybersecurity. It's cool. The article is about banks going on offense against hackers. Of course, banks have to erect walls and then other walls, and they have to create domes, and they have to have all kinds of defensive weaponry arrayed to keep hackers away. Of course, I was speaking metaphorically, and I speak metaphorically about them going on offense, except this is for real. There's a company called Black Cube, which is based in Israel, that specializes in gathering intelligence online. A number of former Israeli spies work for Black Cube, and the bank has been going on offense by hiring Black Cube to have its former Israeli spies infiltrate hackers, either virtually or in person. That means being a quasi-hacker themselves, gaining the trust of the hackers, and so on. You can read the article for some fine, high-drama spycraft. So yes, cybersecurity, not just good money, also excitement. Cybersecurity, you might say, is sexy, or at least it will be, when Hollywood gets a hold of this. Let's get on to the interview. We have with us Scott Picken. Scott Picken is the author of Property Going Global and the founder and chief executive officer of Wealth Migrate, the premier online global real estate investment marketplace. He is an expert in global real estate markets with more than 16 years of experience ongoing. Wealth Migrate offers investors access to below-market real estate in first-world markets through crowdfunding technology with a low investment minimum of just $10,000 US. Originally from South Africa, Scott founded his first real estate investment firm at age 26. It was and is called International Property Solutions, or IPS, through IPS and Wealth Migrate. Scott works to revolutionize the real estate industry through crowdfunding technology and to provide a single hub for real estate investors to build wealth and manage their portfolios. Well, Scott, it's good to have you with us again.
That's quite an introduction.
Yes. I left out your Nobel Prize.
Would it be easier just to say someone who's been passionate about the intersection of property or real estate and technology pretty much his whole life?
Well, I think the passion is going to come through and be very evident as we go forth. Well, you've been traveling. You're always traveling. You travel so much you could play basketball in the NBA. That's my joke for the day. But I refer to your recent sojourns in China, Singapore, and elsewhere in East Asia. What caused you to go there this time, and what happened when you were there?
Look, in simple terms, if I take a step back, about 18 months ago, from a strategic point of view, I mean, we've been running Wealth Migrate now for over 5 years. And one of the strategic sessions we had actually in June last year was where we sat down and we said, right, where's the future? Where's the next 5 years going to come from? And someone actually said to us, rather than trying to focus on England, America, or Australia, why not focus on China and Africa? And in simple terms, the logic was, Alibaba, most people know about Alibaba now, but in June last year, very few people did. And we discussed it, and, Alibaba was twice the size of eBay and Amazon put together. And the point being is that, so from June last year, we said, listen, we are in the emerging markets. We understand the emerging markets, and we understand the needs of investors. But the investors want to be in the first world market. And having invested for, over 2 decades in England, America, and Australia, that was the easy part, finding the real estate opportunities on the ground. So we made a strategic effort. We pretty much had Africa under our belt already. We made a strategic effort to really start focusing on Asia. And I went over in July last year. We were at the very first real estate crowdfunding conference in Singapore, but it was the very first one in the whole of Asia. And myself and my business partner, Dr. Dolph de Ruth, were two of the keynote speakers there, and we actually opened an office there in Singapore. And long story short, and if you want me to give you the whole 12 months, I can, but I've been over to Asia now 9 times in the last 12 months. We've opened subsequently in Hong Kong and now recently in Shanghai. And in simple terms, the reason that to answer your question that you said, why have I just been over now, it was quite funny actually. When we opened in Hong Kong in December, we were told by someone, rightly or wrongly, that the Chinese government was very against people coming together. And they told me something about, some people have, I understood it as yoga, and effectively a whole bunch of yoga people came together and the government didn't like that and put them all in jail. And, I don't know about you, but I wasn't that keen to end up in a Chinese jail. So my thought of kind of crowdfunding and people all coming together and the power of the crowd, I kind of figured the Chinese government would be very much against that. And then there's been a complete turnaround in the last 6 months where, firstly, the World Bank actually was going to host a crowdfunding event, the very first one in China, which we got invited to. And so that was the first step. I was like, well, if the World Bank's keen, then at least I'm not going to end up in jail. And the second thing that happened, which was actually almost at the same time, it was quite serendipitous of the timing, was that the Chinese government came out with their stipulated mandates as to how they see internet finance. So they don't use the word crowdfunding, but internet finance, which includes peer-to-peer lending, et cetera, evolving and what the regulation's going to be. And the most exciting thing was, a week before we were at the event, the Chinese government came out and categorically said that they want to change their country from a manufacturing company to a knowledge-based country, and the way they see it is by empowering people through internet finance. They've actually got a name there called Internet Plus. So I don't know how much detail you want me to go into, but that was really how, why I was there a couple of weeks ago. We were one of the keynotes with a number of, some of the most respected crowdfunders from around the world were actually there. There were about 15 of us Westerners and then some of the best in China. And we were debating the possibilities of both local and global crowdfunding and how to actually participate and get involved. And as I said, it was organized by the World Bank and by a newly formed organization, which was the China Crowdfund Society. And so in simple terms, that was the event. And I was so amazed by what was happening on the ground. We'd been trying to get into China for a while with our partners and our office out of Hong Kong. But I actually found our strategic partners on the ground. Everything we've ever done has been by partnership. We never think that we're naive or arrogant enough to arrive in a country and start from scratch. We found our partners, we found our legal team, we found our office, and by the time I left at the end of July, we were ready to rock and roll in China. So effectively, we've got our Shanghai office up and running. And don't get me wrong, I'm sure as you can appreciate, stuff doesn't happen overnight.
Yes.
But the evolution has started, and no one ever gets to the top of Everest without starting. And we're there. We're on the march, and we're on our way to the top.
Well, all right. For my research, the first crowdfunding platform in China is from 2011 or thereabout. And also, with regard to peer-to-peer lending, the volume in China is either comparable or greater than the United States, something I reported on a few broadcasts ago. And my understanding is that... I can give you those exact stats if you want them. Sure.
There's been 320% growth in China and only 156% growth in America, which is still phenomenal in America, but 320% growth in China.
And some of the growth in China undoubtedly is because there are large numbers of people with capital in China and with a desire to build businesses in China who cannot get the attention of large state-controlled sources of capital, the larger banks, and therefore peer-to-peer lending is filling a massive gap. Is that basically how you see it?
You're right, but I would go deeper. And what I mean by that is that when you live in the first world, everything works. Same in England, same in Australia, same in America. Okay? When you live in the emerging world, it is chaos. It is absolute chaos. And, coming out of South Africa and living in Africa, what they say is that we are experts in managing chaos. And what I mean by that, okay, you've got people that are cash, they've got a lot of cash, okay? So whether they're looking to borrow or whether they're looking to invest, it's a culture of savings. So they have a lot of cash, okay? But there is no structured finance product. Literally their options in China are to buy a house or to put money in the stock market. That's it. There's no all the different, millions of options of financial products that you have in America for people to invest in. So in terms of returns, the problem in the Chinese real estate market is that everyone there is concerned about bubble. So they made a lot of money in real estate in the last, decade or more, but they're concerned about it. They're worried about the stock market because it was all-time highs, and as you know, it's, lost 30% in the last 2 to 3 months. And this is just a very short-term thing, but to be fair, it's been this over the last couple of years. And so what do you do with your money to get a return? And so that's why these online platforms were becoming and are becoming more and more popular, because it's a place for people to put their money. Then obviously for the lenders, it's the same problem. As you said, there's not access to capital to get things going, and it's much more, transparent basically, and that's what they like. So, and I think also, ironically or not, and I know this sounds terrible, but if you look at the simple concept of peer-to-peer lending, you could almost argue that, you're lending from one person to another. And Chinese people like that they've got a mentality where they actually do like gambling. Okay. and by getting, and it sounds terrible, but it's the truth. There's 2 or 3 things that are really important. They do. And this, it's fun and it's interactive and you're involved and you're part of it. But Ross is just putting it in a boring kind of, instrument that I don't know anything about. Okay. But they have no intention of losing money. They also want higher returns. And they've got very used to earning higher returns over the last literally 30 years because the economy has been skyrocketing. And now as the economy is slowing, the traditional mechanisms, the returns are a lot lower. And so in their quest to find larger returns, it's been an instrument for them to go to. And the last thing I would say, which most people don't understand, is that when you come from a country where you're not allowed to take money out of the country, I mean, their maximum threshold is $50,000. So you don't have a lot of options already. I've told you already, real estate or the stock market. You're not sure that either one of them are good. There's not many other financial instruments to invest in. You can only take $50,000 out of the country. The economy is slowing. What do you do? And that's, why I said, I believe you've got to go a lot deeper. But there's a lot of fundamental drivers behind it, which are really pushing this forward.
Well, maybe I could surmise an answer to my next question from what you just said. But let me just ask you, are there crowdfunding platforms that look like our real estate crowdfunding platforms? And if so, it would seem they're mainly in equity, the opportunity to invest in buying real estate rather than in debt crowdfunding. And when I say debt crowdfunding, I'd refer my listeners to Asset Avenue, for example. We had its chairman on a show here, which is a much safer play. You're getting reliable returns if you're in senior debt crowdfunding. But if you want to gamble, I would think those crowdfunding opportunities in China would be principally equity. Is that right?
Yeah, so I mean, I think in terms of, so to answer your question, I was actually shown the top 10 crowdfunding sites in China, and I have all of them. The one thing that most people don't understand, unless they've ever been to China, is that everything is in Mandarin, everyone speaks Mandarin, and no one speaks a word of English. So it's very difficult to get into the detail of exactly what it is. And, you know, I don't speak Mandarin, so everything was working through an interpreter to actually properly understand it. But in simple terms, you know, the current sites are the way that I was described to me by the senior, basically the managing director of a Fortune 259 company called Greenhouse, which is a property developer. They listed on the Hong Kong Stock Exchange with $1.34 billion. They've been looking into crowdfunding for a long time. I went for a meeting with them, and he said to date, the people that they've spoken to, it's been more of a kind of the first stage sales and marketing. It's more just another avenue for sales and marketing, whereas what we talk about is going deep and from the equity crowdfunding perspective and actually really understanding what a real estate transaction is about, understanding the fundamentals and getting involved in the opportunity. So to answer your question, it's almost a balance, and I think they're at a very, very early stage at the moment, and the traditional kind of more heavyweight players are not in the market like they necessarily are in the United States.
Well, all right. But let's say you take an ownership position, or let me back up. Let's say you invest in lending to companies that are buying and developing real estate in China. Is the due diligence data reliable and clear, and can lenders foreclose on defaulting borrowers?
It's a great question, and I want to be very frank on my answer. I have no idea. Yeah. And let me explain myself. Whenever we go into a country, and we've done this, you know, I've invested on 5 continents and invested in multiple countries. So China might be, you know, a big place. It might be difficult, but for me, it's just another place that we're investing. So let's be very clear. At the moment, we're actually helping Chinese middle-class investors, there's 100 million of them, that are looking to invest in quality real estate assets in the first world, in the USA, in the UK, and in America and Australia. Just last year alone, $15 billion left China to invest in American real estate, and $10 billion left China to invest in Australian real estate. So at the moment, we are not crowdfunding for a local Chinese person to invest in a local Chinese operation. We're only helping Chinese investors invest in first world assets. So to answer your question in terms of the lending criteria and the protection, it's actually based on ASIC, the SEC, and the UK legislations versus the local one. Now, with time, the intention is to build that out and obviously to have a local solution. We're not in too much of a hurry within the real estate sector because the market is a bit frothy and in a bit of trouble at the moment. Right. So that's the second reason why we're not rushing into Chinese real estate, because even the Chinese don't want to get into Chinese real estate. And the third thing for me is that whenever you go into any country and whenever you're building any partnerships, we've got a very, very good saying that, you know, we like to dance before we get married. And so, you know, we want to be in the market, we want to understand it, we want to deal with our legal guys for a while we build up the understanding of how the local market works. And, you know, I don't know if that exactly answers your question, but the intention is that the knowledge base is growing, but right now, no, I would not be comfortable to be able to borrow money from, say, a American and lend it to a Chinese person in China and think that I could necessarily recover the money.
I know, when we say dance before we get married, I mean, it's a great metaphor, but I think it works better if we think about more old-fashioned dancing than the dancing that most people have indulged in since the 1960s, right? I mean, more formulaic.
Fair enough. very, very, very good metaphor. I forget that you guys in America do a different style of dancing to others, but no, fair enough. Yeah. No, so I mean a very close partnership, but necessarily still testing, before one goes. Because our whole philosophy, our entire philosophy in the business is based on 2 values: trust, transparency, and the interests being aligned. And the number one thing that we go back to every single time is safety. And so we would rather go slowly and have quality investments with quality compliance and quality due diligence and not make mistakes than to rush in and to, run out to the Wild West and necessarily make a quick buck, but we're going to make mistakes. And I would caution anyone, that was going, anywhere out of a market they didn't understand, but even more importantly into somewhere like China.
All right, then 2 questions. When we talk about crowdfunding of Chinese in overseas real estate assets, what is the crowd? Is it limited to accredited investors as in the U.S. very often, or is it just anybody? Second question, you've spoken of limits on the amount of investment Chinese people can engage in outside of China in real estate. Do you have a sense? Would you guess? Would it be irresponsible to guess whether those limits will be raised or lowered?
So the question is, how transparent do you want me to be? Because I know all the answers. I'm just wondering how much information you want. Simple terms, I'm in the essence of true crowdfunding. I'm going to share all the knowledge and let's make the crowd bigger. So the point being is that, in simple terms, it's $50,000 per person at the moment. In the essence of that, exchange control, and again, people in America will not understand exchange control. I do. I live in South Africa. We've also got exchange control. And it's very difficult to move money beyond limits. But with that difficulty, around the world, 25 million Chinese people that live in China already own a property overseas worth $1 million or more. Okay?
Yeah.
My point being is that there's a huge amount of people doing a huge amount of business around the world that make money outside of China that don't necessarily bring it back, etc. Saying all of that, there's 100 million people in the middle class that don't necessarily have access to that can move their 50,000, and our bankers, our investment bankers out of Hong Kong, have given us a very clear indication in the next 12 to 18 months, and it's already happening with regards to the open zones, etc., that they've been setting up, that they're looking to loosen up exchange control. When I presented at MIPIM, which is the biggest real estate event in the world in March, and at MIPIM Asia in Hong Kong, they talk about the wall of capital being in the region of $1.6 trillion, trillion with a T, that will be looking to leave China and go, around the world to emerging markets and first world markets, but with the focus on first world markets.
There was a prominent USA Today article about a month and a half ago about how crazy real estate prices have gotten in premier urban markets in the United States and Britain, like Miami, London, New York, San Francisco, even Vancouver in Canada, and that some of that was driven by the Chinese investment, which is still subject to currency controls. You can imagine what will happen to those real estate prices when currency controls are loosened, if you could.
So it's 3 to 4%. So you'll have absolutely no idea the impact it's going to have, because at the end of the day, Chinese investors, when they invest outside of China, are very comfortable investing, 2, 3, 4%. And so, where other investors are chasing higher yields, they're comfortable with this. I'll give you a great example. I mean, the gentleman of the investment bank, which has just been bought by Alibaba, by the way, and the gentleman's listed 32 companies in Hong Kong. So, I mean, he's one of the most respected people in Hong Kong. And I sat with him and I showed him some of the stuff we're doing in Atlanta, medical buildings, and I told him that we're buying it at a cap rate of 8.3%. And without even knowing where it was or what it looked like, he said it must be a low-quality investment because the returns are too high. And yet, by the way, for those who don't know or do know, it was in Buckhead in Atlanta, which is one of the top areas in Atlanta. It's medical with 10-year leases, blue-chip tenants. And it was just incredible, the mentality. And I could give you 20 other stories like that. So when you say, well, what is going to be the impact worldwide? People have absolutely no idea what a massive impact this is going to have when their markets are opened up. And there is an argument at the moment that the government is actually manipulating the currency down. They're actually weakening it at the moment to allow and to start this flow of capital. Because the bottom line is they've actually just got too much capital in China. That's why the property market or the real estate market is at bubble territory. It is why the stock market is at bubble territory. There's just too much cash, and they don't know what to do with it.
Yeah, well, with funny remarks, some people say sometimes, I have so much cash I don't know what to do with it, actually is true of the Chinese. But let me ask you.
As you know, they own most of the American government debt.
That's right. Well, let's go back to your more fundamental business, not focusing on China, and let's finish with your response to your actual pronouncement, which is that 80% of overseas real property investments lose money. Why is that, and how can you avoid that fate?
So there's the first reason. Most people that invest overseas, I actually say that, most things in life people try and really overcomplicate. For me, it comes back to two fundamental things. If you're going to invest, whether it's locally or internationally, you've got to have two things, and only two things to succeed. You've got to have the right information, and you've got to have the right partners. So the reason that people fail is that they break one of those rules or both of those rules, and I can give you some examples. One of the things is that they panic. So they might be in China, the stock exchange might be going down, the currency might be going down, and they think, oh my word, I need to do something. And one or two examples, they either, there's a developer turns up from London and he's doing a big launch in Shanghai, and they run to the hotel room and they buy a unit, but they actually have no idea where it is. They told the whole of the stuff that they want here, but it's not really factual, and they just buy it, okay? And they move their money and the currency's at the wrong time, et cetera, et cetera. Or even worse, they get on an airplane, they fly over there, for a week's holiday with the family, and they've really got this anxiety and they want to buy something, and so they just, go and buy something. And I always say, if a Chinese person turned up in New York tomorrow morning with no friends, no relationship, and no context of the market, what are the chances of them buying a good deal?
Right. Not much. Yeah.
So why do people think they can do it? But they do it all over the world. South Africans do it, Australians do it, and everyone does it all over the world. And so the problem is that they don't get the right information, and they hear information they want to hear, but it's not the right information. And when you go to markets, there's so many nuances people don't know. When I started investing in Atlanta over 2012, so it's 3.5 years ago. Basically, for me, if you buy a house on the left-hand side of the street, the kid can go to the good school. If you buy a house on the right-hand side of the street, the kid can't go to the good school. But I'm a foreigner. I don't know that. I don't even know what a good school looks like. So which one do you think the broker or estate agent tells me?
Right.
The one on the right-hand side of the street, because I don't know that. That's the one they can't sell to anyone else. Okay. And I only find out these problems later. Then it comes down to partners. Okay. And the bottom line is that most people's interests are not aligned. So if I deal with a broker's making a commission up front. Now, whether it's a syndication or a real estate broker, they make a commission. And as much as they'll tell you that they're your trusted partner, at the end of the day, they make their money by doing a transaction. Whereas you make your money by investing long term. Your interests are not aligned. And just like if I got married to my wife and I married my wife for her money and she married me for love, it's never going to work. And we wonder why that when we know these principles in life, we don't understand them in investing. And so for me, it doesn't matter what you buy. It doesn't matter where you buy. It doesn't matter how good your asset is. It doesn't matter how good your tenants are. If you do not have a partner on the ground that is going to look after that asset, manage that asset, sweat that asset, you will not succeed long term. I always say to people, you're only as good as your partners on the ground. And I could go on and on and on for a half an hour or more. But in simple terms, they break one of those two rules. They get the wrong information and they get the wrong partners. And the exciting thing, the really, really, really exciting thing for me is that people have lost money all over the world for a long time while they've been trying to go international buying real estate. But like with Uber, like with TripAdvisor or eBay or any one of the other myriad of options where technology has arrived, we've got social proofing, and ultimately technology provides a bridge of safety where you can have the accountability, you can have the trust, you can have the transparency. And that's what truly excites me, because ultimately people can now get what they want, which is to be able to invest overseas, and for whatever reason, there's plan B, wealth preservation, peace of mind, better investment derivatives, but they can also get the safety that they're looking for. And, a lot of people think that it's about taking your $1 and investing overseas and trying to turn it into $1.50. Most people that invest from the emerging world, when they take $1 out, they want to just make sure it stays $1.
Right. Well, Scott Picken of Wealth Migrate, thank you for the depth of your treatment of the emerging Chinese crowdfunding market and for these closing takeaways that are relevant to any investor, but in particular, international real estate investors.
No, perfect, mate. And listen, if you want me to, I can share with you some white papers that we've done on the 4 key things you need to know to investing internationally. Again, we always say to people, we don't mind who they invest with. We just want to make sure that they've got the right information so that they can make educated, informed decisions and ultimately achieve their objective. And, that's what I love most about crowdfunding is that I think the rules of the game are changing, and I think that those quality partners, people can now have access to quality information And I think that's the greatest thing that we all now have access to. We truly can go global because we can invest with the best partners in the best opportunities worldwide. We don't have to be stuck in our local domain.
Well, all right, let's discuss these white papers offline. They sound very interesting to me. Scott Picken, thank you for joining with us.
Awesome. Well, thanks for your time. And sorry if I get a little bit excited, but very passionate about where this world's going and the way that investors now have opportunities everywhere.
It's good for people to know that there are evangelists in South Africa and people from whom you can learn a great deal.
And then, dude, the last thing I would say, is that it's not just investors. You know, if you're a quality partner, property provider, real estate provider in San Francisco, you no longer just have to rely on American banks and American investors, whether it's crowdfunding or anything traditional. You've now got access to quality investors in Shanghai, Sao Paulo, Singapore, and South Africa. That's
an excellent point. There's opportunity all over with the expanded ability of people to get ownership stakes in things all over the world. Well,
thank you very much for your time.
Oh, you're quite welcome. Accredited Investor Markets Radio is produced by Stephanie Strait. You can find out more about Accredited Investor Markets Radio at financialpoise.com and at accreditedinvestormarkets.com, the latter which houses this program. If you have any questions about this or any other programming, please email me, Chris Cahill, at ccahill@financialpoise.com. Thank you all for listening. Let's do this again sometime.
Thank you for joining us. If you enjoyed this episode, you can subscribe through iTunes or Stitcher, or you can download our app from Libsyn. You can also listen right on our website, www.AIMkts.com. Each week, Accredited Investor Markets Radio brings you news and education about investing with a focus on alternative assets. To see a short written summary of this episode, go to www.AIMkts.com. Accredited Investor Markets Radio is a production of Financial Poise Radio Productions, LLC.